Okay, for today's business matters, it looks like Social Security will not be able to pay out fully, that is, monthly benefits in less than 10 years if Congress doesn't take action. This is according to an annual report released Wednesday by the agency's trustees. It finds the combined Social Security trust funds are expected to run dry in 2034, and that's 1 year earlier than previously forecasted. And if that happens, revenue from payroll tax and other sources would only be able to cover 81% of benefits to recipients. There are tens of millions of retirees and people with disabilities who rely on monthly checks from the Social Security Administration. Meanwhile, a successful rocket test launched for Japan's second biggest car maker. Honda says for the first time, its experimental reusable rocket successfully landed after it reached an altitude of about 1,000 feet or for about 1 minute. Honda believes demand for growth for satellite launch rockets in the coming years will be going up, aligning with growth in data systems in outer space. Honda has set a goal for suborbital launch by 2029. And a coalition of battery makers says China's restriction on antimony exports has created a national emergency. The Chinese regime restricted the minerals exports last year. Certain batteries, like lead-acid batteries, need antimony. They're used in gas-powered cars and as sources of backup power in various industries. They're also used to store excess energy generated by solar and wind systems. Antimony is also essential to some military equipment. Beijing added that the mineral to its export control list last September, requiring companies to get licenses for each overseas antimony deal. It then followed up in December with an outright ban on shipments to the US. The head of the Responsible Battery Coalition said policymakers should treat the issue as one of national security. He says Western countries have become too reliant on a single geopolitical adversary for minerals essential for both national defense and everyday life. And Elon Musk is suing New York. He's challenging the constitutionality of a state law requiring social media companies to disclose how they define and moderate hate speech, misinformation, and other controversial content. NTD's Sean Marshall has more details.
Elon Musk's X is suing New York today to try to stop the state from requiring reports on how social media platforms handle problematic posts, a regulatory approach that the company successfully challenged in California, whose enforcement was partially blocked by a federal appeals court last September because of free speech concerns. The law requires social media companies to report twice a year on whether and how they define hate speech, racist or extremist content, disinformation, and some other terms, and to disclose steps they take to eliminate hate on their platforms. Civil fines could reach $15,000 per violation per day. New York's law, which Democrats' Governor Kathy Hochul signed late last year, is poised to take effect later this year. X maintains that the measure impinges on free speech rights and on a 1996 federal law that, among other things, lets internet platforms moderate posts as they see fit. The suit filed in federal court in Manhattan says the state is impermissibly trying to generate public controversy about content moderation in a way that will pressure social media companies. New York Attorney General Letitia James's office said in a statement released Wednesday that it was reviewing the complaint and will stand ready to defend the constitutionality of our laws. Sean Marshall, NTD News.
TikTok is getting yet another 90-day reprieve. President Trump is set to sign an executive order delaying the sale or ban law. The law went into effect in January. It requires a TikTok ban in the U.S. unless it's sold by its China-based parent company ByteDance. Neither has yet to happen as Trump continues to delay the law's enforcement. The White House says Trump does not want TikTok to go dark. Press Secretary Caroline Leavitt says the administration will work over the next 3 months to make sure the sale goes through. She says the goal is to let Americans keep using TikTok with confidence, that is, that their data is safe and secure. U.S. concerns over TikTok also centers around the Chinese regime's control of the company and its ability to influence public opinion, the app has 170 million users in the US. Meanwhile, one of the world's largest tech company is confirming fears about AI. Amazon's CEO says the software company will shrink its workforce in the coming years. Here's the details.
CEO Andy Jassy has delivered his thoughts on generative AI, and some would like to return this message to the sender. In a note, Jassy said that artificial intelligence will change the way work is done at Amazon. As a result, he confirmed workers' fears that he expects AI to reduce its workforce. Jassy explained that fewer people will be doing some jobs done today, and more people will be doing other types of roles. Jassy then encouraged employees to get educated and trained on AI. Amazon shared this memo on X, where some users criticized the company. Business magazine Fortune also challenged the motive behind the memo. It noted that this could just be a mask for imminent or future layoffs, whether they are related to AI or not. Other news outlets like Business Insider and The Washington Post are reporting that they have seen internal comments slamming the note. Amazon's AI workforce warning comes as the company is investing heavily in AI and data centers. The company has already rolled out AI products like its AI shopping assistant, which Jassy praised in his note.
From development to prescriptions, the approval time for some new medications could be drastically cut down. The FDA has announced a new program to issue national priority vouchers for new medications that promote the health interests of Americans. FDA Commissioner Marty Makary said the goal will be to review these in 1 to 2 months. Regular drug reviews take about 10 months, and the FDA's accelerated approval for drugs for life-threatening diseases is 6 months. The special designation will mean extra access to FDA communications, as well as streamlined reviews and the ability to submit information in advance. But the FDA emphasized that this will not change approval standards. Costco is building its first standalone gas station in Mission Viejo, California. It will be the company's largest gas station with 40 pumps. The site used to be a Bed Bath & Beyond store, which will be torn down, unfortunately. Construction is set to begin in the fall of this year. It's scheduled to open in the spring of 2026 and will be located about 2 miles from an existing Costco warehouse. The gas station won't have a store or food court, just fuel pumps. And up to 9 fuel trucks are expected to deliver gas there each day. More than 9,000 cars are expected to stop by daily. Costco hopes the new station will boost its sales. On to India. The country is hoping to develop a high-tech economy as it seeks to compete with neighboring China. A smartphone factory near New Delhi shows a transformation taking place. Here's more.
For India's fast-growing smartphone industry, every part matters.
So this is the battery of the phone. Now, earlier we used to import this, right? Now this is totally localized.
The battery is part of an ambitious plan by Lava International, one of India's biggest domestic smartphone brands, to build the first 100% Indian phone within 5 years. Right now, they still source about 60% of their smartphone parts from overseas.
We import this part from China.
And until 10 years ago, actually manufactured in China.
India must come up and take a large share of the global market.
Yeah.
And for that, some companies have to take the lead.
Now, the momentum is building.
This factory actually opened in 2015, just a year after Prime Minister Narendra Modi unveiled ambitious plans to supercharge domestic manufacturing.
You only have to drive around this city, Noida, just 30 kilometers south of Delhi, to see the landscape shifting.
There's this huge Samsung facility, which is actually one of the biggest mobile phone manufacturing plants in the whole of India.
There's also Dixon Technologies, an Indian company that assembles Google Pixel phones, as well as other big Indian names. And now, as US-China trade tensions simmer and Apple promises to shift its entire US-bound production line to India, iPhone manufacturer Foxconn is also in talks to build a new semiconductor plant just south of here. While some of India's edge may hinge on securing tariff reduction from the US, The official view is that government incentives, as well as India's vast pool of talent and labour, are a much bigger draw.
Do you see this as a sort of inflection point for this industry in India? Do you think this is a pivotal moment?
Yes, of course. For the last 6-7 years, you see progress happening very slowly. You come to a point when things start to change faster, right? So this is what is happening now.
It's an opportunity, but also, as for these phones in Lava's laboratory, a test of India's true manufacturing strength on a global scale.
And just a public service announcement, there will be some closures tomorrow because it's Juneteenth. And it's a day that marks the end of slavery in the U.S., celebrated every June 19th. It became a federal holiday a few years ago, back in 2021. That's why there will be no trading on the New York Stock Exchange and no mail from the U.S. Postal Service, but UPS and FedEx will still be delivering. Juneteenth is a banking holiday observed by the Federal Reserve. Major branches like Chase, Bank of America, and Wells Fargo will be closed, but online banking and ATMs will still be available. National pharmacy chains will have adjusted hours. Walgreens will operate regular hours with a majority of its pharmacies closed, and some CVS stores will have limited hours. Most major retailers and grocery stores will still be open. This includes Walmart, Target, Costco, and Kroger. The 2025 World's Most Livable Cities list has been released, and it features an upset. Danish capital Copenhagen takes the top spot, dethroning Vienna. The Austrian capital had been on top the past 3 years. The Economist Intelligence Unit's 2025 Global Livability Index was released yesterday. It ranked 173 cities around the world on a number of factors, aspects including healthcare, education, stability, as well as infrastructure and environment were all taken into account, with Copenhagen in first place, Vienna tied for second with Zurich, Switzerland. Australia's Melbourne kept its fourth place spot, with Switzerland's Geneva rounding out the top 5. The highest U.S. city on the list, by the way, is Honolulu, Hawaii, which came in at number 23. And joining us now to talk about the Federal Reserve's rate decision today is Louis Navalier, Chief Investment Officer, Chairman and Founder of Navalier and Associates. Louis, good afternoon to you. Thanks for joining us today. So rate unchanged as expected. What did you take away from Powell's message today? Anything stand out to you?
Well, obviously the big news was the dot plot that the FOMC members are expecting up to 2 rate cuts this year. There was a minority of 7 that expect none, but when you average it out, they do expect 2 cuts. So that was very encouraging. That was a dovish statement. The other comment I have is that Powell is insisting that tariffs are going to be inflationary. He cited the private economists and things like that. And then as he started to talk about that, the market did sell off. So the theory is that, they put these 10% baseline tariffs on, which are on now. The dollar appreciates at least 10%, offsets a lot of it. The reciprocal tariffs are supposed to come down immensely because, we can't put those on unless another country does that to us. So there are deals being cut, like with Britain, with no reciprocal tariffs at all. So I'm sure Australia will get a good deal. So this is going to be very interesting, but the Fed continues to look for an inflation bogeyman that doesn't exist. But the Powell did acknowledge that inflation has been coming down in recent months.
Okay, I'm wondering if you would like to characterize this pause. What word would you use? You said it was dovish. Would you say this pause is a bit more cautionary?
No, I think we were relieved that it acknowledged the progress in inflation. Okay, it acknowledged that unemployment's not an issue right now. The Fed has a dual mandate to fight inflation and to keep unemployment healthy. And but I think everything was fine until Powell had his press conference, and then Powell became defiant, which is why he's always in trouble with President Trump, who of course wants rate cuts. Existing home sales in America are 5-year low. So clearly the high rates are impacting the housing market. And obviously, we have a president that was a builder and would like lower rates. He also wants lower rates because of the interest on the deficit. So, we're still confident the Fed's going to have to cut. One reason is the whole world is cutting, and as global rates collapse, we expect our rates will come down, and the Fed cannot fight our treasury yields or market rates.
Okay, do you think the Fed is behind the curve right now? Do you feel that the rates are too restrictive? What are your thoughts on that with, inflation hovering above 2%?
They're grossly behind the curve. Most of the inflation in America is owner's equivalent rent, which is rental costs. That's 90% of the CPI inflation. And if you look at the PCE, their favorite index, personal consumption expense index, that's a smaller component. But in America, home prices are being cut everywhere. Rents are coming down, except in New York City. And the bottom line is the data isn't very good. It's not reflecting the reality of what's happening out there. And I think that the Fed needs to cut. We also have the risk of deflation. We've seen that in the wholesale level. It was down 2 of the last 3 months. Obviously, we do import deflation from China. And also we have all this excess inventory because everybody tried to beat the tariffs. So the Fed is, to say they're behind is an understatement. They're in the wrong year, to be candid with you. So, and if they can't hit the broad side of the barn, so we're very negative on the Fed.
Well, with that being said, I mean, Powell is still saying in today's press conference as well that the Fed is waiting and seeing if the data is telling them anything more. But what is the data telling us right now? I mean, is it clearly showing that the economy is slowing down?
The economy's slowing down, but the economic growth is all from trade imbalances. So in April, we had our imports plunge 55.5%, highest ever recorded dollar-wise, second highest percentage-wise. And then our exports rose 3%, which was impressive because we export a lot of energy and our energy prices were lower. So we expect our export growth is going to continue to improve, and then the trade balances get a little bit more normal. But a lot of it's just being distorted by the trade right now. And so the economy's, it's fine. But it could be a lot better, and President Trump wants to get to 5% GDP growth. And he wants to do that with largely exporting agriculture and energy products, plus he wants to onshore a lot. And a good example is GM just announced they're going to invest $4 billion in the U.S. to move manufacturing out of Mexico into Kansas, Michigan, and Tennessee. So the onshoring is real this time.
All right, we're running out of time here. If I may just ask one more question and get your comments on oil prices and if that has an impact on inflation, because rising tensions in the Middle East have potentially fueled concerns of disruption in the Strait of Hormuz, could potentially, bottleneck oil deliveries and push up prices. What's your level of concern for energy prices driving up inflation?
Well, energy has actually been causing deflation in America because we have relief, but we're at the time of year where seasonal demand goes up. So it would be normal for energy to go up. And of course, the situation in Iran right now is escalating it. I don't think the financial markets were too upset about what was going on because they thought Israel was having a decisive victory. And so as long as that trend continues, I don't think you'll get the oil spike. Now, there's 2 tankers on fire in the Strait of Hormuz, but apparently that was an accident, not anything nefarious.
Well, all right, Louis, thank you so much for your time today. It was great to speak with you.
Thank you.
All right, on to markets. S&P 500 closed basically unchanged today. It was a volatile day shaped by the Federal Reserve's decision to keep interest rates steady. Treasury yields, which had initially fallen, rebounded after Powell's remarks. And earlier in the day, jobless claims dipped but remained at levels suggesting a cooling labor market potentially. Geopolitical concerns also loomed as investors watched for signs of deeper U.S. military involvement, possibly in the Israel-Iran conflict. And that's it for today's Business Matters.